Hello, YouTube. Justin here. In this video, we're going to go through three things. Those three things being the S&P daily death cross, which you can note right here. The second thing we're going to go through is going to be the Fed link swaps, fully pricing in a 7 standard hikes for 2022. And the final thing is going to be the China bad word. Lockdowns could threaten half of the economy. So since there's a lot for us to go through, let's jump straight in. And let's have a look here and see what the SPY daily death cross is. So a death cross is defined when the 50-day moving average crosses below the 200-day moving average. Let's read what that definition is here to get a full and good understanding of why this matters. So what is a death cross? The death cross is a technical chart pattern indicating the potential for a major sell-off. That's the key word there, major sell-off. The death cross appears on a chart when a stock's short-term moving average crosses below the long-term moving average. Typically, the most common moving averages used in this pattern are the 50-day and 200-day moving average, as we noted here. You can also note what those prices are by looking over to the right side of the screen and noting that the blue line corresponds with the blue price and the gray price corresponds with the gray price. Gray line, gray price. There you go. The reason why this matters is because as we go down to these key takeaways, there are two things which are particularly notable to me. The death cross is a technical chart pattern indicating the potential for a major sell-off and has proven to be a reliable predictor of the most severe bear markets of the past century, including 1929, 1938, 1974, and 2008. So the reason why that matters is because as we go back to have a look at our dominant pattern here on S&P or the S&P 500 on our weekly chart, this does not look all that pretty. So we've got our daily death cross here inside a bearish pattern, and we got fresh bear news coming in this morning and today. So what I want to go through here and just explain why this death cross matters is because we look at our low here, 415.16. We look at our low from today, 415.79. So we are barely hanging on to last week's low. And that 415 level is particularly important because I'm noticing we got 420 to 415 all the way down to 410 put spreads for Wednesday and also for Friday, which means they want it below that price. They don't want it at 415. They want it below. There was some headlines that crossed today, which were actually adding some pressure. And again, we'll look at those in a minute here. But what I want to look at is going to be the dollar, because the dollar has been a thorn in the side of S&P and anything that is based in US dollars, basically meaning priced in US dollars. We can see here that on a monthly or a weekly time frame that the dollar has been advancing dramatically. It's now hit a high of 99.41, and it is settling here at the close above 99. So if DXY breaks 100, this is likely going to add even more pressure to SPY. And as we noted before, that daily death cross was a great predictor of past bear markets. So as we have a look here and note that QQQ already gave us that signal, we can note here that on QQQ's daily time frame, we can note here that we already got that death cross here from before. And from the weekend deep dive, what I had talked about was we got our major bounce, we went flat, and then we dove down. And what's notable about here is that QQQ has already made a lower low versus last week's low. And if we look back to the low from the plunge here, the low was 318.26. And today we did breach that, which means we've lost this one and we've lost the other low. So we got lower lows and lower highs. If this is going to continue to be a predictor of the future, meaning looking at QQQ on the weekly chart here, we can note that we already had this massive, nasty funnel lower, which are the blue lines. And then when we look at SPY, it's already starting again. So what does this mean? It means that the weekly pattern on QQQ was an excellent predictor of S&P going into a bearish pattern on the weekly chart. And now we're noticing that QQQ with that death cross, again, a lagging indicator, is now proven that it's been reliably able to tell us when we were going to go down. So what does this tell me? Well, again, since we care about the S&P the most, what I'm going to do again is just delete all of these lines. And let's actually remind you what we're going to be looking at here. So going back up, we got our death cross here. And now we can note that, again, we were looking to save this low. We had a micro uptrend that was forming here. So micro uptrend forming, a little bit of a pennant where we had the potential to maybe break higher. We did it. We broke down. So we got a lower low and a lower high. We took out both these areas. So now both of those will be resistance into the next couple of sessions. And if S&P is going to repeat the same pattern, what would we be looking for? Well, we already have step number one. We got the death cross. We got that massive plunge and the dead cat bounce going to flat. There's our low. There's our higher low. If this pattern will complete, S&P is not only going to lose the low here, it's going to lose the low we put in from before. So today I'm focusing on the bear narrative because there's just more bearish news to go around. Additionally, we got the Fed's linked swaps fully pricing in 7 standard hikes for 2022. So we're largely expecting that we're going to be getting a 25 basis point hike going into Wednesday. But what I want to point out here is that as we have a look at the TNX chart, which I mentioned on the weekend deep dive, again, that video will queue up at the end here if you want to watch it. We now got a bull break on TNX, which is the 10-year Treasury note. We can note this pattern goes all the way back to the 1980s, right? 1988 to be precise, when me, Justin, was born. Looking all the way back to where we are now, we had one false breakout and then boom, we're back above. The 10-year Treasury note advanced dramatically today, up by about 6.7%. I don't know where we're going to settle on this thing, but this is starting to get a little bit worrisome because as the 10-year note goes higher, this becomes more and more a negative for stocks. Finally, looking at the last thing here, we can see China's, again, C-word lockdowns could threaten half of the economy. This looks very bad because as we look here now at FXI, which is the the China 25 ETF, top 25 stocks, it looks terrible. It looks absolutely disgusting, gapping down and flushing to the low of the day. We can also note this weakness when we look at names like Baba. Terrible, down double digits here. Look at JD, it's down double digits. And what's interesting about this is that if we go back and have a look at the IPO price here, Baba is now below its IPO. And we heard from Mobius today saying that sanctions against China stocks could be what could drag these things even lower. There's quite a bit of news this today about, again, China supporting Russia in terms of their ambitions in Europe. I don't want to get into the specifics. I encourage you to Google that if you want to know more. But the tension is ratcheting up. We are not really seeing relief. It's getting worse. It's not getting better. So now what I want to do is I want to go back and have a look at what we normally look at for a normal day here. So I think what I want to do is actually wrap up. Actually, sorry, I know I'm bouncing around a lot. I'm trying something new today, as you've probably noticed. I'll spend a few minutes at the end talking. I also want to talk about Aapl. So what's interesting about Aapl in terms of these lockdowns is that the area where Aapl actually produces them in the Shenzhen region, that's been shut down, which means that Foxconn is no longer going to be able to produce the phones at the same rate they were before. Foxconn is looking to build out a $6 billion or $8 billion plant in Saudi Arabia. And we heard that the prince actually invited Xi over to talk to them as there's tensions ratcheting up. So what was notable to me is that at the open year for Aapl, it actually filled the gap. So it didn't just gap down and flush as we look over here on Baba. So Baba went down, barely got into the gap zone, and then flushed more. So comparing that to Aapl, it still shows that Americans and the world still want to buy American assets. So it managed to get up here and roughly fill the gap and then faded after. So it's only down by about 0.5% more from where it opened. Finally, what we want to do is go through our normal routine. So that's going to be our normal ETFs and major market moving things. So let's pop over to SPY on the weekly chart. So like I said, if we were to come back down and hit the lower trend here and take out that low that I mentioned before, that would not break the pattern, but this is a bearish pattern, which means from the weekend deep dive, we were mentioning that we are on track to hit 400. I think the first big warning is going to be losing that 415 area, and then it's likely going to self-fulfill, go back down and test our other low at 410.6. Shifting gears here to QQQ, which again is the Invesco managed tech sector. We can note here, same thing. This looks terrible. It's not only terrible because we've went below, but on a closing basis, we are below both lows here. Those lows being 319.94, roughly 320. And then over here, we got 318.26 on a close at 318.17. QQQ failed to hold these lows, which means they're both going to be resistance going forward. Also note that we got, again, XLF here battling for its primary downtrend. It closed green because, again, those 7 Fed rate hikes are now being priced in, and that would be supportive for bank stocks. Other thing I noticed today is we can look over here at Bitcoin. So looking over here at Bitcoin, we can note that it's trying to make a move, but as of right now, it's just kind of stalling out. For 2 weeks, we advanced forward, and now we're trying to reclaim those areas. It's up by about 3% today. It's not bad at all. As we look forward to gold, we can note that gold is on a decline. So from the weekend deep dive, we were talking about how 1977 was likely going to act as a pivot. And as of right now, it's not acting as a bull pivot. It's acting as a bear pivot. Looking at our monthly chart, we can note here that, again, we fell below our real bodies here at roughly 2000 and also below our high of last month in 1975. So watching that 1950 area is going to be very important. And then finally, Arkk actually received inflows. So in Slack, I shared inflows here to date. And we talked about Arkk quite a bit in the weekend deep dive. It's actually received $1 billion in inflows year to date. In the last 5 weeks, saw consecutive inflows as well, which tells us that people don't really seem deterred from the weakness in Arkk quite yet. I don't know why. Everyone's talking about it now. It's like it's the worst performing ETF year to date. It's tracking the Russian ruble. I don't know. People keep putting money in, so they seem to be seeing something here that maybe we are not. Finally, I got 2 more things I want to look at here. I forgot. I want to look at the heat map. And the heat map, I want to start off with this. I kind of forgot about it. Sorry. We can note here that tech is dragging. So chips are down. Tech is down. What is up? We got financials, healthcare, and that's about it. Market's not looking all that hot right now. So that's pretty much it. And what I wanted to go through, I think the last thing here is just that I want to find a way to thank our audience and to be supportive of you as we grow the channel, because the channel is now only about, I don't know, when do we build this thing? May of 2021. I think we launched it sometime later. So we're approaching 100,000 views. Hopefully we'll get to that this week. And then we've only been around for a little bit, but we want to thank you guys for your support. And what I want to do is actually do a comment giveaway. So what I'm going to do is go through and choose the top commented video. And here we got Tamazon at 4. I'm going to give her 5. Love how thorough you are in taking the time to share both your bear and bull perspective, what to look for. Your hard work is greatly appreciated. So I want to thank Tamazon for replying to our weekend review. And I am going to give Tamazon a prize. All she has to do is to email us at prizes@blazecapital.com, and we will get that over to you, Tamazon. So thank you again for watching. And if you've enjoyed the video, please drop me a comment. Last thing I would look for is if you are watching for specific ETFs you want me to review on a daily basis, please make sure to let me know. Otherwise, thank you for watching, and look forward to seeing you in the next video. The bear market video should queue up here in a minute if you want to watch the weekend deep dive for more detail. Thank you for watching. We'll see you tomorrow.